All right, good evening and welcome back to the first session of season two, which is going to be a 10-week technical analysis program. And this is your host, Harsh, on behalf of GTCFX. A warm welcome to all of you who are joining in Zoom and also to those who are joining live from YouTube. A warm welcome to you as well. And if you do have any questions, if you are joining from YouTube, please feel free to type in there. I will be toggling my screen occasionally and try to answer your queries there itself. If I'm not able to answer during the session, I will definitely answer after this session during in the comment section. But feel free to let me know whatever doubts or queries you might have. Okay, just to brief everyone, yeah, greetings, Brother Matthew. I hope you are doing well. So we have Mark, we have Matthew, we have Shuklaji, and we have Fang with us. Welcome again. And I think we've been joined by Mr. Patrick. All right, I'm also seeing, uh, I think those who are only Shuklaji has completed the first session. Mark, Patrick, Matthew, and Mr. Fang. I would like to extend a warm welcome to all of you for making the first start. Just to give you a brief for a few seconds, this is going to be a 10-week program. We will start with absolute basic. There is nothing below today's session. We are starting with the sign language, that is the charting patterns or candlestick chart patterns. And gradually we will go through 7 stories to cover the basics of analysis, and remaining 3 stories we will cover the Elliott wave principle and the corrective and the motive structures and waves. That would complete the 10-week program. We will also try and touch up with the charts during each session at the end of the theory. All right, and once again, these are your sessions. We've got only one rule. I'm just a facilitator here. These are absolutely your sessions. Please feel free to stop me whenever you want, wherever you can. We've also been joined by Mr. Ishwar. Mr. Ishwar, today is a theory session, not a live analysis. But good to see you, and hope that you're doing well health-wise. And let's get started. It's called the sign language, and I like to call it as a sign language. There is a reason for it. I'll just explain after the disclaimer. Over-the-counter margin derivative contracts, including contracts for difference and spot foreign exchange, are very complex instruments, and they do come with a high risk of losing money rapidly due to leverage. You should consider whether you understand how these products work and whether you can afford to take the high risk of losing your money. Independent professional advice is highly recommended before investing, and this webinar will serve an educational purpose only and will not include any financial recommendation whatsoever. Thank you. All right, sir. Okay, we have also been joined by Amin. How are you, Amin? I'm very well. Thank you so much for asking. I hope that you are also doing well. So let's get started. For those who are joining for the first time, I mean the season is starting today. This is our second season, by the way. And if you are really interested in learning technical analysis the right way, I'm not saying that we are the only one who will be doing it, but we are very passionate about what we do. And if you're really wanting to learn in a very simple and right manner, please mark the next 9 Tuesdays, including today, 4 p.m. Dubai time, and by the end of I think 27th of May, you would be very happy with the results. But stay with us, please, and the only thing that we need to do is follow through with the practicals when you're alone. All right, so let's get started off with the basic sign language. Okay, Brother Anthony is also there. Welcome, Mr. Anthony. Isaac is also there. Good to see you all, and let's get started off. All right, the session name is sign language with a purpose, actually, because that is the first step anyone would like to take or anyone should be taking before trading. I'll take a moment to explain the reason why. All right, என் பேர் வந்து ஹர்ஷ் இருக்குது. இப்போ வந்து நம்ம சைன் லாங்குவேஜ் ஸ்டார்ட் பண்ண போகிறோம். இது வந்து ஒரு 10 வீக் ப்ரோக்ராம் இருக்குது. அதில் வந்து பேசிக்லேருந்து டெக்னிக்கல் அனாலிசிஸ் எலியட் வேவ்லேருந்து நம்ம ஸ்டடி பண்ண போகிறோம். ஐ எம் ஷியோர் தட் none of us understood anything at all right, except for the fact that if you knew this language, okay, I was just talking sense, but it was not making any sense to any one of them present here, correct? This is the simple most analogy that I can give to understand what exactly the sign language means, because markets have their own language, they speak their own language, they communicate with their own language, in their own language, in its own language, sorry, not there. Our duty is to understand the sign language first, so to learn the sign language that the markets speak, and then simply follow it, period. All right, so we will start from today, right from today, and from the first screen, whatever we are discussing is going to be useful to help us trade with confidence. Whatever is not useful have not been portrayed here. We will not discuss that. Okay? There are many concepts, there are many theories outside this screen as well. If you do have the inclination to have that information, please feel free so. But we will decide or discuss only precisely what is important to trade with confidence, which can help us make money. All right. So the sign language of market are charts. There are predominantly two types of charts which are used by analysts. Charts is a pictorial graph of price versus time, and it gives us an indication of what historical price action has been and what could be the projected price action in the future. All right. Now, the most prominent charting technique is the Japanese candlestick charts. So we will learn the Japanese candlestick charts today and how to interpret the basic patterns. So the first two basic patterns are up on your screens here. On the left hand side, it is a bullish candle. On the right hand side, the red candle I've shown is a bearish candle. All right. Now, before we define bullish and bearish, let's remember two things, please. Each candle can be physically divided into three parts. We need to remember this, okay? Each candle can be physically divided into three parts. Only three parts. One is the cylindrical portion in between, which is called the body. The upper and lower wicks, the small wicks over here, they are also called shadows. That's the second part. And the third part is the length. The length is the distance between high and low. All right. So first things first, a candle is divided into three parts: body, wicks, and length. Okay. I'm saying this because there is a significance of body and wigs and length. It's going to come in the next screen. All right. Please pay attention from here on, because and you don't need to take any tension. Please relax yourself. It's just a story for us. Okay. Sign language. It's just a story. But but please feel relaxed. So first thing is three parts: body, wicks, and length. The second point is each candle will always have 4 points: open, low, high, and close, without which the candle will not complete. It has to have these 4 points mandatory. Okay. And if we know open, high, low, close, we can also determine the type of candle, whether it is rising candle or a dropping candle. Now let's define a bullish candle. Please, the definition goes like this. Please listen carefully. When close is significantly higher than the open, such a type of candle is called bullish candle, because the control is lying with bulls. I repeat, sir, when close is significantly higher than the open, it is called a bullish candle because control is lying with bulls. And on the right hand side, when close is significantly lower than the open, it is called a bearish candle because control is lying with the bears. All right. Now, these two are the basic patterns called the bullish and bearish, and these two are also uh, decisive candles. I repeat, these two are decisive candles. If you look at this candle on the left hand side, you can say that it is decisively bullish because control is lying with the bulls, as simple as that. That one is decisively bearish because control is lying with the bears. We've got a question. Could you please dictate a little slow? Okay. Okay, I didn't know that you were writing it down, Matthew. I'm sorry. Uh, when close is significantly higher than open, it is called a bullish candle because control is with the bulls. It is without any doubt that this candle is controlled by bulls. And when close is significantly lower than the open, it is called a bearish candle because control is lying with the bears. I mean, just a humble suggestion, Matthew. Uh, Rather than focusing on writing, if you just focus on on the screen, uh, you will be better off because I have a habit of getting it straight to the heart. You will not require notes. And second thing, these sessions are recorded. Each session is recorded. They are uploaded on the YouTube because it is more important that you see the screen here. When you say close and open, it refers to the price. Yes, it refers to the price. For example, let me give you an example. This candle opens at price 10, okay? And then it drops to 5. So 5 is the low here. And then from 10, it goes straight to, from 5, it goes straight to 100, okay? 100. And from 100, it closes to 95. So when it rises from 5, it leaves a wick behind. When it drops from 100, it leaves a wick behind. All right. I hope you understood. Okay. Mark, I'm not saying that you don't write, but I'm just humbly making a request if possible. But if you do have a habit of writing, please continue. I will go very slow. And if you want to stop me anywhere, you can please feel free. So, okay? No problems at all. As I said, these are absolutely your sessions. I'm going to abide by your requests anyways. No, no, Matthew. I'm talking about Matthew, not Mark. If you want to write, you can write it down, Matthew. No problems at all. But please remember, please let's come to a common point, everyone. Let's come to a common point, everyone. The first candle, the left hand candle, is a decisively bullish candle because close is significantly higher than the open. The right side candle is a bearish candle because close is significantly lower than the open. All right. Now, do we all agree to this, please? Can you confirm that you don't have any doubt? I want to make sure that we are all clear. Can you confirm with an OK sign or an OK message so that we can go ahead? All right, sir. All right, Patrick. Thank you very much. Thank you, Mark, as well. All right. Now this screen is for you, sir. Please look at the screen. Please have a look at the screen and let me know. We have to define each candle here. Each candle on the screen we have to define whether it is a bullish candle or bearish candle or indecisive. There are only three options. There are only three options. Bullish, bearish, and indecisive. Okay. There is no fourth option. Let's start with the first candle, please. This screen is for you, sir. I humbly request an answer from your side. The more we participate, the more we will gain. The more we participate, the more we gain. Okay, Mark says indecisive. Anyone else, please? Patrick, Matthew, Mr. Fang, Brother Amin, Brother Anthony. What do you think? Bullish, bearish, or indecisive? Please don't worry to answer. The maximum thing is going to happen is, okay, we are going to be wrong. Okay, we've got an answer from Brother Anthony. Anthony says it's bullish. Okay, great. Anyone, please? Amin is saying, okay, Brother Amin is saying it's mixed. Okay. And Brother Matthew is, what is BIDB, beer? Shuklaji is indecisive. Great to hear that. Matt, I'm really confused about your answer, brother. BIDB. Mark is changed to bullish, is it? Mark has changed to bullish, is it? Patrick is mixed. Mark is bearish. Okay. Oh, no, 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 Matthew. Okay, Matt, what? I only want your answer. What do you think this candle is? Bullish, bearish, or indecisive? That's all. Okay, Mark, I got your answer. All those who have answered indecisive, I am really not much interested right now. All those who have answered bullish, I think I will focus on them. And all those who have answered mix, brother Amin mix, and one more, Patrick is saying mixed. So what is mix? I don't know what is mix. Is it are you trying to say indecisive? There are only three answers: bullish, bearish, and indecisive. Now, those who have said bullish, I think only one, brother Anthony said bullish, and two of them mix. My friend Matthew is so fast. First is bullish, second is indecisive, third is bullish, fourth is bearish, fifth is bearish. Amazing. Okay, fine, great. So first is bullish, okay, Matt? All right, that's amazing. So everyone who says bullish, who have answered bullish, please have a look at the screen. Everyone, we've all agreed that this candle is bullish, correct? We've all agreed that this candle is bullish. Do you find any physical difference between this particular candle which you are saying bullish and that one? Do you find any physical difference between the two, brothers? Those who said bullish, could you please answer? Is there any difference between these two candles? Is there any physical difference? That's what I'm asking. I'm not asking anything else. A simple question, a simple layman question. Is there any physical difference between these two candles? I'm definitely sure you would have said yes. Fine, body shape is different. So there is a difference, right? Physical difference. So if you say that this is bullish, we have all unanimously agreed that this candle is bullish, then how can we say that that is also bullish? There is a physical difference, right? Can you identify the difference? Brother Amin has already said the body is different. Here, the significant part is of the body. Here, the significant part is of the lower wick. I want to bring your attention to this part. When close is significantly higher than the open, it is called a bullish candle because control is lying with bulls. Here, the body is significant. Here, the body is not significant. The body is there, the body is green, but it is not significant. The significant part is lower wick. Do you all agree with this logic or not? If you don't agree, then say you're not agreeing. I will explain further, please. I will try to break it further. Specifically, okay, brother Anthony, I think math has also got. Now the only simplicity that I want every one of you to understand is we've got to focus on the significant part. Ah, yes, I intentionally got you tricked, brother. Which part of the first candle is opening price? This one. This one is the opening price, Mark. Which this one is the opening price. That is the close. This is the high, and that is the low. Now, listen, everyone, please listen carefully. This is the most significant part. I'm trying to simplify it further. If the significant part is body, then it has to be a bullish or bearish body. It has to be a bullish or bearish candle, sorry. If the significant part is not body, please do not waste your time on it. If the significant part is not body, it has to be indecisive. Do you get it now? Here, the first candle, which part is significant? Now, please don't ask me what does significance signify. There is no measurement of significance. The only measurement is our eyesight. When you look at this particular candle, which part comes to your eyes first? The lower wick comes to my eyes first. That means it is significant. In this candle, upper and lower wick, they come to my eyes first because they are significant. In the third candle, again, lower wick is significant. In the fourth candle, upper wick is significant. In the fifth candle, lower wick is significant. In all these five candles, there is no significance of the body, sir. What does it mean? All five candles are indecisive. Are we all together now? All five candles that I've shown here, they're all indecisive. None of them is bullish or bearish. Is that okay, sir? Everyone, if you have understood or if you are with me, kindly confirm, because this is very important exercise and the first exercise of the entire program. And I'm going to show it to you right on the charts. All right? Excellent. So the first simplification of, see, I'm telling you, sir, 95 patterns are there. 95 official candlestick patterns are there. If you want, you can learn them, you can Google them, you can take printouts. Each candle has got a different shape, different name. This is called a hammer, that is a star doji. This is also a hammer, that's a shooting star. This is again a pin bar. You can learn them. That is only information. It is not going to help us trade with confidence. The thing which is going to help us trade with confidence is the knowledge to understand the difference between bullish, bearish, and indecisive. And the difference is only one. Which part is significant? No, you don't. It's up to you, Mark. It's up to you. I don't know 95 of them. Okay. I know only one thing. If there is, if the body is significant, it has to be a bullish or bearish candle. If the body is not significant, I don't care. I simply put it in the indecisive box. That's it. All right. It serves my purpose. It solves my purpose. So for us as a trader, for us as analysts, there are two boxes. One is decision box. And in the decision box, we have got two candles, bullish and bearish. And the second box is labeled indecision box. And there are 95 candles officially, I would say infinite. All right. We don't want to we don't want to get into that. I hope it is absolutely simplified and absolutely clear now. Bullish means bulls under control, bearish means bears under control, and indecisive means none has control. All right. Now, let's go one step further. Now, it's not going to take much time. The grammar is complete. The grammar was the most difficult part. Now, we've done the grammar. No problems. Thank you. Thank you for your kind words. This program is only about one thing, sir. This all 10 weeks are only about one thing, simplified version of technical analysis. Believe it or not, after 4 sessions, we will all be somewhere from where we are starting right now. All right. And there are no technical jargons. All right. Even after the end of the second session, you will be able to see the charts like very differently, very differently. All right, now let's pay attention. The grammar portion is over. There are only two boxes, decisive, indecisive. There are only three types of patterns, bullish, bearish, and indecisive candlestick, period. Okay, now what is going to enable us to buy or sell? Today's session is for that. what we are going to see on the chart, which is going to help us decide whether we want to buy or sell. All right. By the end of this session, clearly we will know that. And we are not going to revisit it anytime in the remaining 9 sessions. So, many traders would want to believe that, okay, since there is a decisive box, after the decisive candle, I would be able to take a decision. Or after a bullish or a bearish candle, I should be able to decide because it's a decision box. But the truth is, neither the decisive candle nor the indecisive candle is capable of producing a trading signal. Neither of them is capable of producing a trade signal. That's the most interesting story. But when they combine, when there is a combination of the two boxes, yes, we get a powerful signal. And that is when the market is telling us a story that I've been doing this, now I'm going to do that. It would be good for you to buy or sell. All right. So sit tight and enjoy. There are there are actually three signals which we will discuss. The fourth one is not a complete signal, but I will still discuss. You can take it further after you gain some confidence, okay? But actually there are three signals to buy and three signals to sell. Total six, but I'll give you two additional, makes eight. That's the first one. It is called a morning star. Now, pay attention, please. A morning star looks like this. It is defined as this. The first candle is called a bearish candle. The first candle appearance will be bearish. Okay, the first candle will be bearish. The second candle will be indecisive. There can be more than one indecisive candle, but there will be at least one indecisive candle. All right. Here I have shown three indecisive candles. And after the indecisive candles are complete, you get a bullish candle. Now you know what is a bullish candle. Now the body of the bullish candle should be at least 50% of the body of the bearish candle. Now please don't confuse yourself. I have already defined what is a body. So when I say body, you should visualize the cylindrical portion. The body of the bullish candle should be at least 50% of the size of the body of the bearish candle. I would say 60% is better. For example, the bearish body, that is from open to close, is of 50 points. The bullish body should be at least 30 points. Whether it is appearing lower or higher doesn't matter. The bullish body should be at least 30 points. If it is 30 points, that is 60% of the bearish body, we have got a trade signal here. And this trade signal is called a morning star. And in this morning star, the market is telling us a story as follows. I have been dropping from earlier, all right, from such and such price. Then there was a fight between bulls and bears, all right, and now bulls are just come in control. Bulls have just gained control. So why don't you buy me? This is the story the market is saying. And this arrow is our vision, our eyesight. We have to look at the chart like this. All right. Falling, fight going on, and then bulls in control. We should buy the next candle. All right. That's the morning star. I hope it is clear. The next bullish pattern. It is called tweezer bottom. That means now these two are which kind of patterns? Indecisive box. So both candles are indecisive. There is no other candle in between. Both are appearing back to back. I have intentionally shown a red body, small one, a green body, small one. but it has got no significance. The significance is of the lower wick. Body can be red or green, or there can be no body at all. It doesn't matter. All right. That is a tweezer bottom. All right. Lower wicks, minimum 50% of length of the candle. Now this is the significant. The lower wick significant. No problem, sir. Mark, green comes first, green comes second, red comes first, red comes second. No problem at all. It has got no significance. The only significant part is that lower wick. This lower wick should be at least 50% of the length of the candle. Please listen carefully. This lower wick should be at least 50%. I would say 60% of the length of the candle. Length means what? High to top to bottom. I can only thank you so much for your kind words, brother Amin. Mark, previous candle. No, it doesn't really mean on any candle. Please only understand the two candles here, whether they are red or green or no color at all, whether green or red or no color at all. You have to see this area. I'm showing the red dot over here. Don't get confused. This is the area which is telling us the lower wick should be 50% of the length of each candle. So if I am the red candle, 60% should be my wick. If I am the green candle here, green candle, 60% should be my wick of my length. Is it clear now, Mark? Not the previous candle. My own length. My own length. Okay? So it should be 60% of my own length, not the previous candle. I hope it is clear. This is a tweezer bottom, and this story is so wonderful. Just listen to the story, brothers. And you must make a habit of creating your own stories. Once you create your own stories, it will be so easy to understand. Yeah, yeah, I understand. I'm brother Matthew. When I'm referring to the length of this candle, I'm referring to one candle. But overall, it is a combination. There should be two candles back to back. Both should be indecisive in nature, pointing south. The wicks should be pointing south. Okay. Let's say, for example, if you hang me on a tree, if you hang me on a tree by neck, I will look like this, correct? Two legs hanging down. Is that okay? Is that okay? Remember, two wicks pointing south. Okay. All right. All right. So the story is, market is telling us a story that I've been dropping from certain price. Now I dropped in this particular candle. I went up to, let's say, price of 100, but bulls pushed higher and closed almost near the open. This happened almost the second time. Bears pushed low, dragged me lower, maybe to 99, but again, bulls pushed higher and closed near the open candle. This has happened twice. This has happened twice. So it is, I'm possibly bottoming out. Maybe I'm going to rally from here. Why don't you buy me? This is what the story market is telling us. Believe it or not, sir, when I started in 2008, I started creating small stories with the grace of God. And it took time initially, but slowly it was so wonderful to create stories and understand that it became a play for when you sit in front of the chart. It will communicate with you like a human if you understand the story. All right. So that's the tweezer bottom, two wicks pointing south. And the final thing is the easiest to identify. It is called engulfing bullish. First candle will be bearish, the second candle will be bullish, and the bullish body will be 100% of the bearish body. The bullish body will be 100% of the bearish body. If you put this bullish body on the bearish body, you will not see the bearish body. All right. This is a theory, but practically you can go with 90%. Sometimes I go with 85% as well. All right. Yeah, this one is very easy. All are easy, Mark. The only thing is you have to practice. I mean, your eyesight needs practice. See, I'm telling you, sir, one more thing. Now, from this point onwards, what is our background doesn't really matter. Whether we have studied engineering or medicine or we have not studied at all or we have a PhD or a mathematician or anything, it doesn't really matter. Only one thing matters. What we see on the chart is what we are going to do in our trading platform. If we can see the correct thing, we are going to do it. We are going to do the correct thing. If we see wrong, we are going to make a mistake. All right, as simple as that. So what we are going to see, and all these exercise, all the 9 sessions, in fact 7 sessions, the first basic, they are all only doing one thing, making us spatially intelligent. That is, we will be able to see at one point in time what others are not able to see, and that is what makes us a different person as an analyst. Okay, that's the fourth one. It's not a complete candle. I'm not spending much time on this. It is called a pin bar. It is a 50% candle. Mostly after a falling market, when you see a pin bar, it signifies potential change in direction. Yeah, we can do that. We can do that. We will be doing every other, I don't know what you mean by every other day, but if it is trading or analysis, of course we can do that. Trading strategy, sir, in a rising market, please listen to this carefully. In a rising market, the last pattern is not really significant because it's not a complete pattern. It is a half pattern. It is called a pin bar. It is an indecisive pattern. It is a half tweezer bottom. It is called a pin bar. Pin bar is not a complete pattern. It's a trader's pattern actually. It's not a signal. When you gain confidence after maybe a lot of practice, when you gain confidence, then only you should trade this. Not immediately. Please request. It's a trader's practical trader's pattern. High probable direction projected higher from here. All right. So please do not uh, pay much attention right now. Just pay attention on the three signals: morning star, tweezer bottom, and engulfing bullish. In a rising market, please listen carefully, sir. This is a very important thing we should know when we are starting. Okay, when we are starting to analyze, we should know the right thing. So if it is being bar, it's mostly in this. Yes, Patrick, it's indecisive. Yes, it's a pin bar. Pin, pin bar, not Bing. Pin bar, Pin. Yeah, pin bar. Okay. In a rising market, please identify bullish signals and buy. I repeat once again. In a rising market, please identify bullish signals and buy. I may not do this. You will also not do this after 1 year. You will, in a rising market, you will also sell sometimes in a counter trend. But to begin with, in a rising market, please lock in your subconscious mind. In a rising market, the right way to do is find a bullish signal and buy it because the market is rising. All right, you will have better chances to make money. Okay, now let's go further to the. So that's a trading strategy. Don't worry about the strategy right now. It's only going to be changed after 2 sessions. You buy the next candle. After the signal appears, you buy the next candle. You place your stop loss 15-20 points below the low of the signal and then try to double the risk. All right. But don't worry about the strategy right now. We are not going to trade anyways out until the fourth session is over. All right. Please pay attention to the three bearish signals now. The first bearish signal is called an evening star. It's only reverse. The first candle is bullish, at least one indecisive. Here I have shown two indecisive, and then it should be followed by a bearish candle. Again, the body of the bearish candle should be at least 50 to 60% of the body of the bullish candle. Exactly opposite to the morning star. If you understood the morning star, just reverse it, flip it. That's an evening star. Then tweezer tops. Two candles indecisive back to back, two indecisive candles back to back, no candle in between. Wicks are pointing north. So you hang Hirsch upside down on a tree. He will look like this. All right. This is the easiest way to remember. Upper wick is significant. It should be around 50 to 60% of the length of each candle. It's a bearish signal. The third one is the easiest one, engulfing bearish. The first candle is bullish, second candle is bearish. The bearish candle covers 100% of the bullish candle and it should be sold. Simplification, that's a pin bar again, but this pin bar is also called a shooting star. The other pin bar can also be called as a hammer. And this pin bar appears after a rising market. It has to be sold, but not right now after you gain some confidence, please. So simplification, in a dropping market, identify bearish signals, evening star, tweezer tops, and engulfing bearish, and then sell the signal. All right. Here's the strategy. Once you have the signal, you sell the opening of the next candle. Place your stop 15-20 pips above the high and try to double the risk as profit. Okay, now I'm going to uh, so we've covered these many things. Simplify the charts, identify trade signals, 6 signals we've identified, and a simple trading strategy. Don't worry about the strategy. We are all going to have amazing two powerful strategies by the end of the third session. Now, this is the most important point of the session. Now, Mark, especially, you have already opened an account, you're already starting to trade. After the session is over, don't get excited, please. If you find a morning star, don't rush to buy that right now. Not every morning star has to be bought. A morning star which appears at a specific confluence, that has to be bought. The confluence is very important. And we are going to unfold the confluence in the next three stories. Yes, please. Because I have experienced this in my past sessions. After the first session, one of my participants went and shorted natural gas heavily and sorry, bought heavily and on a morning star, and it tanked low. It reversed lower. But that particular morning star appeared not at a confluence. It was a falling market, not a rising market. All right. I mean, from that day onwards, it has been 15 years for that day. From that day onwards, every time we take this session, I always request, please hold yourself for 4 sessions. I promise one thing, after 4 stories are uncovered, you'll have amazing confidence to go and trade on yourself. Amazing confidence. All right. Not until that, please. Until that, we need to do only one thing, practice. Okay, I'm not going to show the chart here. I'm going to take you the real charts. For those who are watching us in the YouTube, okay, Rama, you can look at any time frame. Rama, you can look at this any time frame right now. We are going to cover time frames very soon, but right now you are absolutely free to take any time frame. Okay, I need to flip the chart to a candlestick pattern. All right, I'm going to show you a rising market first, all right, and then we'll go through a falling market. So that is a rising market. All of you can see this rising market. Okay, just since we don't have much time for the sessions here, I'm going to do the practicals. That is a morning star. Yes, Patrick, there will be this video are being recorded. They will be uploaded on the YouTube playlist. I will send the playlist right after the session. But also we are planning to upload videos on the website very soon. So you'll be able to watch again. Yeah. Please please pay attention. This is the first morning star. You see that morning star here? Everyone see this morning star? There's another morning star here. There's an engulfing bullish candle here. This is a practical engulfing bullish candle. Okay. Are you able to see now? I've tried to zoom in. This is a morning star, another morning star, an engulfing bullish. Again, this is the practical engulfing bullish. This is an engulfing bullish again. See, rising market. I'm only focusing on bullish candles and buying it. I'm not focusing on bearish candles and trying to sell it. Why? Because if I sell those candles, I'm going to lose at some point in time. They will drop for a while and then again pick me out. So rising market, focus on bullish candles. At every low, you will find a bullish candle. See, this is an engulfing bullish here. That's a beautiful morning star. That's a practical way to deal a morning star. Bearish, indecisive, the first bullish candle did not cover 50%, but if you combine two bullish candles back to back, it serves a morning star. So this is how you have to be practically sound. All right, that's a rising market. We bought all bullish candles and we identified bullish candles and bought it. And I'm now trying to show you a bearish chart. Yes, Matthew. Yes, you have to hold yourself, brother. After entering the trade, when you have to close, just please hold yourself for one more session. By the end of the second story, you will answer this question, okay? Just for one more session. I can answer this question right now, but it will be predominant. It will be premature. We have not discussed the second story yet. And by the end of the fourth story, you will be able to precisely say with price. Every time I have to simply hold for 3 sessions, that's all. After that, you are absolutely amazingly free. That's the first engulfing bearish. That's the second engulfing bearish. That is an evening star, again an evening star. Oh, from here the market started rising. So this evening star should not trade. One evening star, second engulfing bearish, third engulfing bearish, fourth evening star. Is that clear, sir? Yes, Rama, I tried to zoom in, sir. I think it is okay now. People are, oh, something happened. All right. Are you guys clear now, please, with the practical session? And one more practical session, sir. Bullish, bearish, and indecisive. I will spend 2 minutes with you now. Just listen carefully, please. I am moving my mouse from this candle, okay? And I'm going to shout out which type of candle it is. Just listen. Bearish, 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 bullish, bearish, bullish, bullish, indecisive, bearish, indecisive, indecisive, bullish, indecisive, bullish, indecisive, indecisive, bullish, indecisive, bearish, bullish, bearish, bullish, indecision, indecision, bearish, indecision, indecision, bearish, indecision, indecision, bearish, indecision, indecision, bearish, indecision, bearish, bearish, bullish, bearish, indecision, indecision. Is it okay? When I shout out, there are only three options: bullish, bearish, and indecisive. There is no fourth option, sir. If you when you try to shout out, if you say I don't know, that means there is something wrong. Please look at it again, because there is only one truth: bullish, bearish, indecisive, period. There cannot be any other fourth candle type. All right, sir. So, with this note, if you allow me, I will bring the session to a pause, and I'm posing. That is my email address. Please, you can note it down: harsh.jappi@gtcfx.com, and this is the YouTube playlist. This is the YouTube playlist, and those are the list of all webinars. If you want to join on Zoom, you can join here. All right. If you're not yet registered, anytime feel free, please, to write an email to me with whatever query you may have, and I will be very happy to get back to you in less than 24 hours, always. And once again, I want to humbly thank you, everyone, joining in Zoom, and those who are joining from YouTube. And I thank you, everyone. I don't understand. Okay, Mark, you started with $500. Okay. Patrick, I have pasted the link. You can see the YouTube playlist. If you have any difficulties, write an email to me. I will send you individual videos. Okay. So once again, thank you, Mr. Fang. Thank you, Mark. Thank you, Matthew. Thank you, Shuklaji, as always. God bless you, Shuklaji. Thank you, Brother Patrick. Thank you, Brother Amin, Anthony, and all of you. Have a great rest of the day. And we will meet next Tuesday for theory and Friday for the live sessions in English. If you are interested in Hindi theory and live sessions, please join Wednesday and Thursday as well. We are doing live sessions which are broadcasted on YouTube 4 times a week: Tuesday, Wednesday, Thursday, Friday. Tuesday and Friday in English, and Wednesday and Thursday in Hindi. All right. So once again, thank you to all, and I will be shutting down the session for today. I'll be closing down for today, and we'll see you next session. Okay, Patrick, just a moment, just a moment. Don't worry, I will send the link again. Patrick, no worries, I'm sending the link again. Actually, it was a private message, okay. Patrick, now you should see the link. Everyone should see the link now. Okay, so if you do have any questions, please let me know. And thank you again. Thank you, everyone. And I'll hope to see you next Tuesday for the theory and Friday for the live sessions. Please mark Tuesdays and Fridays if you are interested in the English sessions, 4 p.m. Dubai time. Please mark Tuesday and Friday, 4 p.m. Dubai time if you are interested in English. And if you're interested in both Hindi and English, all 4 weekdays, Tuesday, Wednesday, Thursday, Friday, 4 p.m. Dubai time. All right. Thank you very much. Goodbye.